Hi, welcome to Real Estate Tax Tips. My name is Cherry Chan. I'm a licensed CPA whose mission is to help 10,000 hardworking Canadians to build six-figure side hustle and minimize their taxes. Are you a business owner who has the same question? Where did my money go? Have you ever wondered why you're seeing one number on your financial statements, but seeing a radically different number in your bank account? Have you ever had a nightmare finding out that you owe CRA a bunch of money at the end of the year and you have no money left in your bank accounts to pay for the tax payable? If you're currently suffering from this "where did my profit go" syndrome, you've come to the right place. Today, we're going to talk about this cash flow management system called Profit First System, a system that I have learned and implemented in my 5 businesses, and now I can sleep at night not worrying about paying for payroll and taxes. Before I dive into this deep discussion, make sure you subscribe to our YouTube channel to stay on top of the latest Canadian tax tips. If you like our video, make sure you give us a thumbs up and comment below. Now let's get started. Let me tell you a personal story. In 2011, I decided to leave my cushy job at the biggest grocery chain in Canada. As the manager in their accounting department, I decided to become a full-time real estate agent, working primarily with my then boyfriend, now husband's real estate agent business. I did fairly well. I made 6 figures the first year. I was pretty happy about my business until tax time. I was hit by a really big tax bill at the end of the year. I got nothing left in my bank account to pay for the tax payable. As an employee, our employers are obligated to withhold all our tax obligation and send them to CRA on behalf of us on a monthly basis. The salary we received from our employers is net of all the tax that we have to pay for most people. We can spend the full amount without worrying much about paying CRA at the end of the year as an employee. But it isn't the same for self-employed professionals and small business owners. We're now the employers, and we are the one that's collecting revenue on behalf of CRA. We have the obligation to make payments to CRA. Back then, after I earned a decent 6-figure business income and hit with a huge tax bill, I had to rush out to do a few more deals to pay for the CRA bill. I'm ashamed to share this story. After all, I went to school just to study accounting. School taught us how to prepare a cash flow statement, but they never taught us how to manage our cash flow accordingly. It was then I stumbled across this book called Profit First. This particular book, written by Mike Michalowicz. After reading this book, I immediately implemented the system across all my businesses, and I've never needed to lose sleep at night worrying about money. As a disclaimer, I'm not here to sell you this Profit First system. I'm not affiliated with the author or the book. I just thought that we as small business owners can share whatever works. We cannot afford not to implement the system in our lives to manage our cash flow better. Now, let's dive deep into how the system works. Step 1, you need to set up 5 different bank accounts. Now, first of all, we would need to set up 5 different bank accounts. Each bank account has its own dedicated purpose. The first one, we use it to receive all of our income. The only purpose of this bank account is to receive income. The second one is called the tax account. You will use the funds to pay CRA tax installment, your personal taxes, as well as all HST obligation. Now, the third one is called Owner's Compensation Account. You've started a business, you would have to hire someone to run your business if you are not working in the business. Most small business owners start with rolling up their sleeves and putting in 80-90 hours a week to get the business up and running. You can also choose to hire someone instead of yourself to work in the business. If you choose to hire someone else, you would then have to pay that person a salary. The purpose of this owner compensation account is to make sure we are allocating some cash to paying yourself, the operator of the business. As entrepreneurs, we often pay ourselves last. We should really learn to pay ourselves first. Now, the fourth account is called Profit Account. This account represents the funds that you would set aside to reward you as a business investor of your own business. It's similar to the idea of you buying TD Bank stock. You buy the stock to earn dividend. You're investing in TD Bank's business. If they do well, you are rewarded with the dividend. And the account would represent the amount of investment return you would receive as a business investor. Last but not least is the operating bank account. All the business expenses, including payroll, rent, utilities, cell phone, internet bills, everything should come out of this account. Now that you set up all your business bank account, what's the next step? The next step is that you need to build this habit and start depositing all the revenue into the income account. From the income account, on a periodic basis, we will then log into the bank account weekly, bi-weekly, or even monthly if you want, and transfer a portion of the money into the various bank accounts based on a fixed set of allocation percentage. Let's use an example to explain. Let's say that I received $10,000 plus HST on an invoice. That is equivalent to $11,300. I deposited the entire $11,300 in the account. My cash balance in the income account is now $11,300. The process is mostly automatic. I set up my accounting software to deposit the cash balance into the income account. On a weekly basis, I log into my online banking system and start allocating my cash from my income account to the different bank accounts. In my business, I allocate about 20% of the total cash into my income account to the tax account, 15% from income account to the owner compensation account, and 5% to profit account, and 60% to the operating expense account. This means that I transfer $2,260 to my tax account in this particular example, being $11,300 multiplied by 20% to the tax account. Then transfer 15% to my owner's compensation account, so it has about $1,695 at the end of the day. I also transfer 5% to the profit account, and I transfer 60% to the operating expense account to pay for rent, utilities, and all other expenses that I have. This type of transfer has to happen regularly to make the whole profit first system effective. Next step is to name your accounts and hide them from you. Now, to make managing your cash flow easier, the book Profit First suggested that we should rename our bank accounts accordingly. Now, every bank is different. I use Scotiabank, and what you see here is a screenshot of Scotiabank for my business. I went into the setting to rename all 5 business bank accounts. I named them Income, Operating Expense for OpEx for operating expense, and I named the percentage that I would allocate to that bank account. In this case, I'm allocating 50% of the cash I collect to the operating expense account. I named the owner's compensation account as Owners 15. As I am allocating 15% of all the incoming cash flow to the owner's compensation account. Same goes to profit account. Lastly, I name my tax account Tax 20, just to remind myself that I will allocate 20% of my incoming cash flow to the tax account. The next step is to hide the accounts from you. Scotiabank also allow me, I believe all the other banks as well, allow me to have this function to hide certain bank accounts from my login view. I purposely hide owner's compensation account, profit accounts, and tax accounts from my login view. Now, the reason is because if these accounts are out of sight, they're out of mind. I wouldn't think that I have so much money left that I can spend it all, especially with tax account. Tax account balance is CRA's money, so I don't want to see the balance and think that I can spend what I have in that particular account for my daily operation. Every time I pay CRA tax installment, both HST or income tax, the money comes out directly from this tax account. Every time I pay my personal tax, it also comes out of this tax account. This account balance does not belong to me. I hide it, so it is out of sight, out of my mind. I also hide my profit account. Profit account represents the return on investment. You can think of it as a saving account. You allocate a portion from your incoming cash as saving on the side. Once a year or every now and then, you'll see how much profit you could save up over time. You can reinvest the profit into the business, such as buying a new equipment, setting up new office, whatever it is. You can also choose to take your family on a nice vacation at the end of the year. The idea is to allocate the cash on a regular basis to this account, hide it from your view, and a year later you get to see how much return you have on your investment. Now, in terms of owner's compensation, I personally like to hide it from my regular login view as well. I allocated what I am entitled from working in the business. I might not take it out personally because I want to minimize the amount of taxes I need to pay. So more often than not, I have a good balance left in this particular bank account. I want to hide it from my myself so I won't go on a spending spree and lose them all. Make adjustments accordingly. The allocation percentage you see is a sample, that one that I am using in one of my business. Every business is different and your compensation and spending is different. The idea is to start somewhere and implement it. The book Profit First has some sample allocation percentage for you to start off with. Once you have committed to a set of percentage, start implementing them, and if it doesn't work, revisit it in 3 months. You can always start small and slowly make changes to the allocation percentage. Now, so what's the end result? Once you have the system set up, you can simply log into your bank account, check your balance. You can easily see your account balance and how much profit you made. You know that you would have enough money set aside just for tax purpose. You might even start accumulating profit, and you can surprise your family using the cash in your profit account with a Disney trip. The opportunity is endless. What if you're not business owner? This entire system can be applied to your personal spending as well. You can have different accounts for different purpose. You can have a dedicated household expense account that pay for your home mortgage, utilities, everything related to your house. You can also have a saving account, so an account that would keep growing for your retirement. You can also have a travel account that allow you to save and allocate a portion of your income to the travel budget, and then an emergency account just in case. The opportunity again is endless. The key is to start now, have the system, and so you will eventually have the money saved up for what you want and prepare you for the unexpected. And of course, when in doubt, make sure you buy the book, read it, and understand it better. Make sure you speak to us when you implement this cash flow system. Thank you so much for watching. If you have any questions, make sure you ask them in the comment section below, and I will personally get back to you. If you like what you have seen, make sure you like the video, give us a thumbs up, and subscribe to our YouTube channel to stay on top of the latest Canadian tax tips. Until next time.